Hello, I'm Ben Colclough, and with me is Eddy Pieniazek, the Global Head of Consultancy at Ascend. So Eddy, the year's drawing to a close. We've just got back from the Dubai Air Show. Can you give us an update of the firm orders for the manufacturers for this year?
Well, even without Dubai, I think 2011 has been the best year for firm orders since I guess about 2007. We've had 2,300 gross orders, just under 2,000 net. This is firm orders for jet aeroplanes. That's about 40% above the figure for 2010, and it's 4 times higher than what we had in the bottom of the downturn in 2009. Airbus and Neo leading the way, 1,200 Airbus orders, 80% of which have been for the Neo aeroplane. Boeing had collected about 400 orders, of which 350 have been for the 737. So it's the narrow bodies that have been selling, as you might expect. Dubai, well, that introduced a lot of new orders and commitments and memorandums of understanding. We had Qatar for the 320 Neo, we had Spirit for the 320 Neo, Lion Air with a massive commitment towards the 737 MAX and the 737-900ER, ACG, the lessor, had gone for the 73 MAX as well, and Emirates, of course, with a big order for 50 777-300ER. So if we add all that into the mix, 2011 looks like a very positive year, certainly as far as the order books are concerned, despite the fact that the economic situation doesn't quite feel so healthy. What does it all mean for the airlines? Well, I guess it means that the airlines are still positioning to renew or grow their fleets. And I think one thing that we do need to remember is that when all these airlines are ordering these aircraft, this isn't necessarily all additions to the fleet. I mean, if you look at Lion and Spirit and Emirates, they have many aircraft already on lease, and a lot of those leases are timed are timed with the arrival of the newly aircraft that they've ordered. So as aircraft come in, aircraft are also going out. I think the airlines then have the option of actually choosing whether they need to keep an aircraft or extend the lease if the markets are good, or they can actually return it if the markets are bad. So the options are there for the airlines. What it does mean, however, there's a knock-on effect in terms of the used aircraft market, and it means that the supply and demand picture isn't exactly clear until nearer the time when these leases of the existing fleets are coming due. And the orders aren't just coming for the major manufacturers. If you look at some of the new manufacturers out there, Comac and Irkut and Sukhoi, they've collected at least 200 new aircraft orders just this year alone. So it's a picture that's the orders are being placed across the globe for a variety of different manufacturers. But bearing in mind our focus on our San Francisco conference coming up in a week or so, the US carriers, they're still expecting to see more orders being placed there. I know American and Delta have placed orders already. But their average fleet age is 15 and 17, and if you look at North America as a whole, their average fleet age is 13. If you compare that to 10 years in the Asia Pacific or 12 in Europe, you can still see that the American fleets still need to be modernised a little bit further, and I think we're still expecting to see something coming from United and Continental. They still have to make a movement, and some of the other established carriers still have more aircraft to order, perhaps even so on the wide body fleets as well. So we're expecting to see more happening in the US marketplace, and we expect to hear a bit more of that at our conference.
Thank you very much, Eddy. And don't forget that the Ascend Global Consultancy team will be at the Finance Forum in San Francisco next week. You can register on the website now. Thank you very much.